Hello friends, in this session we are going to discuss certain important questions with explanation of the concept in respect of principle and practice of banking paper of JAIIB. So we can start with our questions. So question number 11. Which of the following is not a characteristics of zero coupon bond? सो इनमें से कौन सा फीचर जीरो कूपन बॉन्ड का फीचर नहीं है? सो दैट इज आवर क्वेश्चन. सो हियर वी हैव द ऑप्शंस. फ्रेंड्स, फर्स्ट ऑफ ऑल, व्हाट इज ए जीरो कूपन बॉन्ड? Zero coupon bond is a bond which does not carry any interest. So no interest is paid on zero coupon bond in the form of interest rate. So that bond which does not offer any interest rate, that is called zero coupon bond. Now, in such bonds, no one will invest if there is no interest. Now, to make up that interest, these bonds are issued at a price which is different from their face value. So in case of these bonds, the face value is kept high, which is paid at the time of maturity. And at the time of issue of this bond, lesser amount is taken from the investor. The difference between the face value and value paid by the investor at the time of issue, that represent the interest element. So in the light of this discussion, we can now discuss the answer. It is issued at a discount to face value. B. Periodic interest is paid normally on a half-yearly basis. Here we have to find out which is not the characteristics. It is issued at a discount to face value. Yes, it is like that. Hence, this is not our answer. Periodic interest is paid normally on half-yearly basis. So no interest is paid on this bond. This is not a characteristics of this bond. Hence our answer will be B. But B can see the C option also. Difference between issue price of the bond and redemption price. Redemption price means the amount paid at maturity. So difference between these two represent return to the investor. So this is correct. D. The holder gets only one payment of such bond at time of maturity. So this is also correct because no interim interest is paid. So option B does not match the characteristics. So इसलिए option B is our answer. Commercial paper has not the following features. So let us see what are those features. So we have to answer which of these features does not meet the requirement of a commercial paper. First of all, what is a commercial paper? Commercial paper is usance unsecured promissory note. So it is usance promissory note and at the same time unsecured one. So this can be issued by companies as well as financial institutions. Banks cannot issue it. And this instrument is issued by the companies to raise short-term funds. Like a zero coupon bond, this is also issued at a discount to face value. Now we can see these features and find out which feature does not meet this explanation. So it is unsecured instrument. Yes, that is correct. It can be issued by rated companies, financial institutions and banks. No, banks cannot issue it. Only rated companies can issue it or financial institutions can issue it. Hence, this feature does not meet the requirement. So this is our answer. But we will see option C also and option D also. It is issued to raise short-term funds. Yes, it is correct. It is issued at a discount to face value. So this is also correct. So only option B is the right answer. commercial paper minimum amount is rupees 5 lakh and minimum period is 7 days and maximum period is 12 months. So let us go to question number 13. Pay in, pay out. In a payout day, the payment and delivery of securities is made. So this question is in the context of stock exchanges. In a payout day, the payment and delivery of securities is made. So these are our options. So the options are: the delivery and payment is made by one broker to another, by broker to stock exchange, by stock exchange to broker, by one stock exchange to another stock exchange. So first, let us see what is pay in and pay out. Pay in. Pay in means when brokers make payment or delivery of securities to the stock exchange. And pay out when stock exchange makes payment or delivery of securities to the dealers, to the brokers, then that is called payout. So in the light of this explanation, we can see these answers. So by one broker to another, no. By broker to stock exchange, no, this is pay in. By stock exchange to broker, yes, this is pay out. So option C is our answer. Let us now go to question number 14. When an already listed company issues fresh securities to public, it is called. So if a company is already listed on a stock exchange and it issues new securities, fresh securities to public, so that type of issue is called. So these are our options. So first option, let us discuss initial public offering. No. Initial public offering means when a company goes for public issue for the first time. Here it is not for the first time, it wants to fresh securities and it is already a listed company. Bonus offering. Bonus offering means when new securities are issued not to the public but to existing shareholders. Rights offering. Rights offering is also the fresh securities, but these are not issued to public. So follow-on public offering. So this is our answer. Follow-on public offering means when a company issues new shares to the public whereas it is already a listed company. So that is called follow-on public offering. Let us now go to question number 15. When a company has to go for public issue on book building basis, the offer document is in the form of. So whenever a company has to go to public for a public issue, but on book building basis, the offer document is in the form of. So these are our options. First of all, what is book building process? Friends, in a book building situation, the company issues an advertisement by offering shares where it does not disclose the price. So it will simply make an offer of range of a price. So it will not fix the price of the share. The price of the share will be offered by the investor, the prospective investor. And whenever this type of issue is offered, the public document which is issued to the prospective shareholders is called red herring prospect. So instead of issuing a normal prospect, in case of a book building issue, the red herring prospect is issued. So now we can examine our options. First, offer for sale, no. Prospect, No, because prospect is issued in a public issue which is not a book building. Letter of offer? No. Red herring prospect? Yes, this is the answer. Let us see question number 16. For the purpose of public issue, the term retail investor means an investor whose investment is not more than. So these are our options. Friend, retail investor means an investor whose investment is not more than rupees 2 lakh. So in the context of a public issue, when we say retail investors are offered certain shares on reserve basis, on preference basis. But to be a retail investor, the amount of application money cannot be more than rupees 2 lakh. Hence, C is our answer. The legal organization of a mutual fund is in the form of. So whenever a mutual fund is established, it is in the form of registered society or trust or registered company or section 25 company. So whenever a mutual fund is established, its legal organization format is in the form of a trust. A mutual fund is established as a trust, not as a registered society, not as a registered company or section 25 company. Section 25 companies are the companies which are promoted on no profit, no loss basis. Now question number 18. Performance of a mutual fund is denoted by which of the following? So mutual fund, how to measure their performance, how they are performing. So their performance is denoted by which of the following? So these are our options. Face value of the investment, current market price of the investment, net asset value of the investment, net amount of dividend declared. Friends, face value of investment is only face value. It is not market value, so it cannot be indicator of performance of the mutual fund. Current market price of the investment, so this is also not the indicator for performance of a mutual fund. Net amount of dividend declared, this is also not the indicator of performance, so dividend keep on fluctuating. Net asset value, it is indicator of performance of the mutual fund. So net asset value, how it is calculated? Net asset value is calculated as current value of the portfolio plus current assets minus current liabilities divided by number of shares, means number of units issued by that mutual fund. So net asset value is calculated like this, and this is an indicator of performance of mutual fund. So question number 19. The term indemnified in the context of insurance stands for. So this is a very typical term. So it indicates what? In the context of insurance. So these are our option answers. Motor vehicle insurance is compulsory. Contact of insurance is of utmost good faith. Insurance is a matter of solicitation. All matters, material facts should be disclosed in the insurance. So motor vehicle insurance is compulsory. It does not represent this. Contact of insurance is of utmost good faith. Yes, this term stands for this. So when we say a contract of insurance is of utmost good faith, so technically we call it indemnified. Insurance is a matter of solicitation. This means whenever someone wants to take insurance, he has to take his own decision. The insurance company at the most can explain the features to the person who wants to take insurance, the decision regarding whether to take the insurance policy or not, that the decision will be taken by the person who wants to take insurance. All material facts should be disclosed in the insurance. So this is one of the principle of insurance, that the person who wants insurance and the company which is providing insurance, both of them must disclose all material facts. Later on, if it is found that material facts have not been disclosed, then it can create a difficult situation. Well friends, we can go to next question. As per Insurance Ombudsman scheme, the Ombudsman is empowered to redress customer grievances where insured amount is. So like banking ombudsman, there is ombudsman for insurance sector also. And insurance ombudsman can look into the grievances where amount is up to rupees 20 lakh. So we can see the options. So here is our option answer. Let us now go to question number 21. Factoring is a service which is concerned with. So factoring is a service which is concerned with. These are our options. And before these options are discussed, let us see what is factoring. Friend, factoring means short-term receivable, domestic receivable created by the seller by sale of goods on credit are financed and managed by a factor. So factoring is an arrangement where a factor company manages and finances the short-term domestic receivables which are created by seller of goods known as a client by sale of goods on credit to the buyer. So this type of arrangement is called factoring. Now in the light of this explanation, we can see our answer here. So financing and collection of account receivable in a domestic. No, this is not complete answer. It is management also. Financing and collection of account receivable in international trade. No, not in international. It here again financing and collection only, but not management. Financing and collection of accounts receivable in domestic and international trade. Yes, it is financing and collection of accounts receivable in domestic as well as international trade. Here it was only domestic, here it was only international. So answer C is the correct answer. We can see option D also. Issue of security receipt for the amount to be recovered under sale contract. No, this is not the answer. Well friends, this completes our this session also. Thank you.